Greetings, February 5th, 2021, Hamptons Market Update, from my kitchen table to yours. I'm John Watson, your Hamptons real estate broker. How's the market? The question that everyone asks. The market's comprised of many segments: buying, selling, renting, and investment. However, with a broad brush, I can disseminate current conditions to you. According to multiple articles from the National Association of Realtors, Case-Shiller Index, Forbes, New York City brokerages, just to name a few, on a national level, in general, home prices are forecasted to rise 5 to 7% in 2021 as inventory is shrinking, with some areas still having buying frenzy and bidding wars. On a regional level, New York City has seen a 12% uptick in contracts across most markets as the pandemic slowed the urban sales, with buyers fleeing the market for less densely populated areas such as the suburbs and the Hamptons here. But according to reports in New York City, sellers have been more willing to negotiate and lower their pricing. As such, deals have jumped. Locally, the Hamptons the past 2 weeks have seen contracts level off at 55 units per week. This is after 3 weeks of lower sales rates. The lowest sale rates were still 50% higher than a year earlier. It's interesting that the uptick in New York City sales correlates with our decrease in sales during the same period. However, our sales, I would think, is more of a seasonal blip than anything else that happened over Christmas, New Year's break. Listings this past week did increase as I expected, as owners are beginning to hear the early market reports that indicated the market increased dramatically, therefore jumping into the market to their advantage. According to the CPF fund collected, December 2020 tallied $21.31 million, the highest ever recorded in the fund's history. Total 2020 collections, all 5 towns on the East End, averaged 79% greater than 2019, $139 million over $77.88 million. The December number is important to point out that the early market reports that you've probably read have not fully accounted for all the sales data, as there's a 4 to 6 week delay in publication of the deeds. Still, they do provide an indication of activity. I only just received my CPF numbers, as this was just tallied. The CPF was started to preserve our East End open land, open space, and to help the farmers. And with the increase in such a large amount of money, they'll be continuing to buy more land or ecologically sensitive properties. What this means for the East End is the more developable land they take off the table, the more stable to increasing our property values are going to be, as we can only support so much development with the existing land. Will the East End markets continue to sustain such a brisk pace? Spring has historically been our best market. The basis is to get in for summer. This year is showing activity not only for that reason, for the get in for the summer season, but also to have a place to go, just in case. Advances in remote working, internet capabilities, and the fact now that many workers who work in office environments really do not need to be there and are just as productive, if not more so, at home. Being thankful to have a job, as well as nervous. We're not working in an office. People are working better and harder. Week over week, contracts have outpaced new inventory almost 2 to 1, with the exception of last week. We had an additional 41 units. However, there is still an inventory deficit week over week over week. What this really means is it's a great time to buy out here. As time goes on, inventory becomes more depleted, values will continue to rise, and interest rates are forecast to remain relatively low throughout the entire 2021 period, for those of you who are using debt for your purchases. It's also a historic time to sell. The East End has never had a sales cycle like this ever. This is historic, and if this is your time or you're thinking about it the next few years, perhaps you want to advance it to now. There are buyers waiting for the right property if they come onto market. Specifically, this past week, there were 55 contracts with 41 listings added, a continuous metric of sales outpacing supply. 1 unit between 10 and 20 million, 3 units between 8 and 10 million, 2 units between 6 and 8 million, 2 units between 4 and 6 million, 13 units between 2 and 4 million, 27 units between 1 and 2 million, and 7 units under a million. That's 47 of 55 contracts to 4 million, the most prolific segment that we have. And the week prior, it was 49 of 55. Demand is forecast to be high for the foreseeable future, not only here but nationwide, outside of the urban markets as stated. Please keep in mind the Hamptons, we're definitely a little micro market compared to New York City. New York City probably has 13,000 listings. We only have in the mid-2000s at any given point. There's only so much to go around. I'm John Watson, your Hamptons real estate broker. 30 years in the business with construction, mortgage finance, valuations, and brokerage experience. I have an elevated understanding of real estate and would love to help you with your real estate objectives. I think experience matters. Please feel free to call or text me at 516-551-6404 for further discussion, or email me, john@hamptonsrealestatebroker.com. Have a great day, and talk to you guys next week. I'm out.